Enjoy your meeting. Just a reminder, today's meeting is being recorded.
I'm John Siverling, the Executive Director of the Christian Investment Forum. This presentation is entitled Principles of BRI, What is Biblically Responsible Investing? I first gave this presentation in 2014 to the Christian Financial Advisor Network CFAN group at Ameriprise, and I thought it was worth making it available to a broader audience while also adding some newer materials. The goals of this presentation are to, 1, provide you some of the core principles of what we believe is biblically responsible investing and show the varied ways it is utilized in credible and professional investment decision-making. 2, to dispel a couple of the misperceptions about BRI that limit its wider use. And 3, to begin conversations with advisors, investors, and Christian leaders to help provide whatever support is needed to learn and engage in the topic of BRI. Let me start with a short intro of the Christian Investment Forum. Why does CIF exist? Because we at CIF believe that faith-based investing is the best investing approach for Christians, and as it becomes widely adopted, it can have a fundamental impact on our faith, our culture, and on ourselves. We believe that business, that work, that capitalism can be in full alignment with God's plan, that business can be a blessing to us, our families, and our friends. The Christian Investment Forum was created by those that believe this, with the purpose of building awareness of biblically responsible investing and encouraging others to follow the same path. From that why of CIF is what? What is our purpose or mission? CIF's mission is to advance the awareness and use of biblically responsible investing. Let me repeat that quite simply. CIF's mission is to advance the awareness and use of biblically responsible investing. So the inevitable question is how? How do we plan to meet that why and what of CIF? Well, we plan to meet it through research, through tools, training, and the education of advisors, investors, and Christian leaders. This presentation, What is BRI, is a beginning and a part of that how. And there is a need for education on what is BRI. In 2013, CIF completed a survey of Christian financial advisors and found a significant gap between their interest in recommending BRI to their clients, where 80% said they'd like to recommend, and their confidence in their knowledge of what BRI is, which was only 33%. That gap is part of the rationale for doing more of our training. So what is BRI? BRI is a concept more than a name or a label. In fact, there are many terms used to describe what we define as biblically responsible investing. Our definition is BRI is an investment decision-making process that applies Christian values in the investment analysis, seeking to invest in companies that best represent those Christian values. So while that may be a useful definition, but as a concept, we need to understand the core foundations of BRI if we're going to make it work. What is BRI? The reason for BRI, or biblically responsible investing, is to align investments with our faith. Aligning investments with the investor's faith and biblical beliefs makes BRI a personal process, much like risk tolerances and other core values of an investor hold true. And while Christians share core foundational beliefs, it is also true that on many topics, personal faith will lead Christians to differing opinions and, more important, differing priorities. This makes it difficult to place a simple label or definition on what BRI is and what it is not, or how it is applied into the investment decision-making process. It also requires that we view BRI not as a legalistic concept or practice, but rather a motivation. And that motivation starts with accepting the fact that God owns it all, and we are mere stewards of it. As stewards for God, BRI is then about doing all we can do to give God our very best. It is about loving what God loves and seeking to own and profit from companies that align with that love. Conversely, it is about avoiding companies that conflict with that love or are more aligned with our sinful nature. And it is also about finding and investing in companies that positively impact their communities, the environment, and our society. Because it is important to remember that despite the fact we have artificially separated them, investing is ownership in the business underlying the stock. Investing is legal ownership. And ownership confers responsibility on the owner. And in the process of becoming an owner, of being a good steward of an investor's assets, which really are God's assets. And so we can't forget that biblically responsible investing is still about making good investment decisions through a professional investment process. Financial analysis, valuation techniques, technical research, all of these things that are used by professional investors remain critical, but underlying them and first through the lens of our Christian faith. Through that lens is how we decide what companies align with God's love and seek to invest in those companies. The foundations of BRI determine that investment strategy, and they fall into these three core tactical areas: screening, governance, and advocacy. So let's take a look at each of these briefly, but separately. Screening is the most widely understood aspect of BRI, and specifically negative or exclusionary screening. Negative screening is often thought of as almost synonymous with BRI, even though BRI is more than that. Negative screening is probably the easiest tactic to understand. It is about removing from consideration companies that don't align, but rather conflict with honoring God. An easy example of this is, should I exclude Playboy from consideration as a stock to invest in? And I think most Christians would agree with that statement. Here are the most commonly used criteria for filtering the investment universe up front. Those in bold are those most commonly used in core BRI screens. But they're all used, and this process of filtering or screening is similar to other filtering used by investors across the financial industry to remove companies, for example, whose PE ratio is above a certain level, or those with profit margins below a threshold. It is about selecting the universe of investment options, and screening goes a long way to do that. Similar to those types of screens I just mentioned, BRI negative screening requires decisions on what levels or thresholds are reasonable. Take alcohol as an example. Do I have a zero tolerance to any revenues or business activities related to alcohol? If so, I may not be able to invest in grocery stores or other retail stocks that otherwise would be excellent investment choices. Alternatively, I may choose to set a revenue threshold of, say, 5% of revenues, or a parameter that excludes those companies whose primary business activity is alcohol. So you can see that there is thought that must be put into the screening policy to best align it with our faith and to continue to be a professional steward of the investments. So opposite negative screening is positive or inclusionary screening. This is a newer idea within investment circles, but it's about seeking to identify some of the best companies through certain screening parameters, also known as best-in-class investing or great stewardship. One simple example would be to prioritize investments based on the customer satisfaction scores of companies in an industry and what they receive, believing that customer satisfaction leads to better profits and increased company value. So select companies based on higher customer satisfaction. A visual interpretation of this form of screening is this graphic, developed by Eventide Funds as part of their Business 360 initiative. Basically, the theory is that companies that do a better job of serving their customers, employees, and others will be value creators, while those that focus on short-term profits at the expense of customers and employees and suppliers will be value extractors, whose share price may decline or not grow as much as a result. So that's screening. And from screening, we move on to the next core tactical area, which is governance. Governance is both a pre-investment analysis tool and a post-investment monitoring tool. As an owner of a company, regardless of whether you own 50% of a small business or 1,000% of Google, ownership confers responsibility. We visited this before. Investing is ownership, and ownership confers responsibility. So before investing, it is appropriate to consider how a company's board is constituted and its governance structures. After investing, it's important to carefully consider proxy votes and shareholder proposals to the extent that the company and their board continue to align with your interests and faith. CIF member firms, such as Epiphany Funds, take this responsibility seriously and spend time on governance on behalf of their investors. We'll have a presentation on our website soon from Epiphany describing in more detail how they approach governance from their faith-based BRI perspective. And certainly other CIF funds, member firms, do similar governance issues. The third key tactical area that we've talked about that are the foundations of biblically responsible investing is in the area of advocacy and engagement. As Christians, we are called to care for others and be productive stewards of God's gifts. Engaging the companies that we own to ensure that they also care for others and are productive follows that same logic. Advocacy is about speaking on behalf of the disadvantaged, but it is also part of serving the interests of clients and shareholders. A good example of engagement in action is Everence Financial and Hershey's. Everence successfully engaged Hershey's on its cocoa sourcing, which was unintentionally supporting child slavery and repressive actions where it was being farmed. Advocacy takes time and effort, but may have the greatest impact on the companies and our culture by engaging in our culture as opposed to avoiding it. It relates to the instruction to be in the world, not of the world, to thrive in Babylon as Daniel did, or flourish in exile just as God instructed through Jeremiah. We have more on the Hershey story on the CIF website. And we'll also have a separate presentation on advocacy and the issues associated with advocacy and engagement on the website soon, as we seek to add more education, more training and tools for you as we try to understand more about what BRI is. So these three core foundational areas and the descriptions of them should give you a better idea of what is included when a firm talks about using biblically responsible investing. Understanding that it is a bit of a complex issue, that there has to be thought put into the process of picking priorities and choosing where and how to go about incorporating these things, or incorporating all of these things. For the Christian Investment Forum, all of our member firms are committed to BRI and aligning investments with the Christian faith. However, they do not all share this exact same criteria or priorities, but they all go above and beyond standard investment strategies as they seek to be great stewards for God. All of them better align Christian faith with investing than a non-BRI fund because the CIF firms are motivated by their faith. Importantly for investors, compared to 15 years ago when there were only 5 mutual funds that described themselves as BRI focused, today there are 70 funds offered from CIF member firms across 28 asset categories. Other CIF members, such as Aris Corporation, Camelot Portfolios, and CFD Investments, use these mutual funds to develop faith-based model portfolios for advisors and investors. And as you can see from this slide, the ability to diversify across the equity style boxes and among asset categories is possible using funds just from the CIF member firms. Some of the best bond funds in the industry are also available from CIF members who incorporate their BRI motivations into their investment process. Well, I hope this information has been helpful in getting started with the understanding of what BRI is and what it is not. Every CIF member is available to provide more information on how they incorporate BRI, and I'd encourage you to engage with them in conversations to learn more. Each of them and their contact information is available on the CIF website. They can help increase your knowledge and confidence in how to effectively present BRI to your investors. Thanks.